How's it going, everyone? Today we're going to talk about SMT, which is smart money technique, and some people call it smart money divergence, which is a concept from ICT. SMT is for to identify potential reversals in financial markets. SMT is mainly based on the idea that is related to assets such as ES and NQ and Dow Jones, which are generally move in the same direction and make similar highs and lows. SMT occurs when one asset makes a lower low while another makes a higher low, which is called a bullish SMT. In this example here, if we compare these two, let's say these two are the different assets but correlated, right? Let's say this is an NQ, this is an ES, doesn't matter. As you can see, NQ here makes lower low, break this low, and ES here didn't take that low, which is an SMT. There's a divergence in the market, which mainly says that price is going to continue going up to its direction. Uh, if you look at the charts, like I'm gonna show you some of the examples, of course. If you look at the charts, like all the main moves in the market, like big moves, start with an SMT. SMT is really good indication of if price is going to go up or it's going to go down. So now let's look at the charts now. In this example here, we have a bullish SMT. How do we know this is a bullish SMT? I'm on the NQ chart right now. So as you can see, on NQ, price made a lower low. If we go on an ES chart, there, same time, Thursday, 18th April, and Friday, 19th April. As you can see here, we actually made a higher low, which is indication of price that is going to go up. We're on a high time frame as well. We're on a 4-hour time frame, and this is a really good indication that price is most likely going to reverse or start a retracement, which price did. As you can see, price started going to retrace to our maybe um, in premium area in this case. So let's look at this example. I think I remember this one as well. So as you can see, ES actually took out all-time high here, made a higher high. If you go on an NQ here, NQ failed to take the high out. If you look down where the dates are, 21st March and for April 1st. If you go on ES, we have a 21st March, March 21, and April 1st, 1st April. So it's just my analysis. Okay, so how can we use SMT in our trading? Okay, let's dive into the closer. Let's look at it closely. Mainly, mainly ICT says that it is preferably it is better to trade the asset whichever makes, in this bullish example, whichever makes higher low, or in the bearish example, whichever makes lower high. Oh, so because it tends to be stronger in its way, because structurally, if we talk about structurally, this one is stronger because it failed to take that low out, which is like tends to be more bullish. So how can we use SMT? SMT is just it's just a confluence. Of course, you need to have an experience on the market. You can't just see an SMT and long every SMT and short every SMT, because there's needs to be a reason. Of course, in every ICT, many like mainly every asset concept needs to have a reason, price to go up or price to go down. In this case, when we had an SMT here, down here, we had a reason actually to go up because we had an imbalance to fill up here, up here. We had that imbalance to fill up. and then potentially move lower if price is bearish. So let's go on a lower time frame. So we know that we have an SMT here, which price we know the price is going to go up and take this buy side liquidity out. Let's go on a lower time frame. Let's go on a 15-minute time frame. So after us knowing that we have an SMT here and we're bullish to this highs, we can look for uh, another. We can look for an entry model. So if we look at this chart, what can we do to see an SMT here is we can compare this asset to the another one. So I just compared ES chart to the NQ chart. So if you look at this with candles, as you can see here, actually before we started moving up, ES failed to take out this low, but NQ, if you look down here closely, here NQ did actually take the low out. That is an indication of an SMT. So we had an SMT before price started to move up. But if you look at it closely as well, so focus on 945 candle on NQ. This candle, this big candle, focus on that. If you look at a 945 candle, we you see it's small, right? I'm on 15-minute chart. If we go on a lower time frame, this candle also confirmed that it didn't take out this swing high, but this candle will actually take out all of the swing highs right here. But this one, like on ES, didn't take out. So before we move down, before NQ moved down to this low, SMT was there as well. So SMT is a really, really, really good thing to have in your trading. I don't think there's any reason for you not to look at SMT. But what could have we done here? Maybe on 15-minute chart. So we know we had SMT here. We have higher time frame SMT. We have a reason to go up. We have this lower time frame SMT as well. What time is it? It's 11:15. It's New York times, right? So we could have longed this right here on this Ferrol gap here. Put your stop here. Maybe doesn't matter. And TP on the highs here maybe to the higher time frame. Depends on the analysis, but we're not here to talk about the entries, to be honest. So let's look at the lower time frame here. So let's mark out our 945 candle first. 945. So let's look at the lower time frame SMT there. Let's go on a 1 minute chart. Here, NQ took, let's compare it again. So here, as you can see, NQ took all these highs. These lines are NQ. Let me turn on the uh, candles here. As you can see, NQ went way up and took all those highs, but ES failed to take those highs. It means we have an SMT divergence on these highs right here. So after knowing that we have an SMT divergence up here, we have an SMT with NQ, SMT here. So we know price has a reason to go down. The reason is to take out this sell side to retrace to the equilibrium and then expand higher. If we know that we have an SMT here, so we can take short somewhere here, doesn't matter. It's up to you. The entry model doesn't matter, to be honest. You could have taken a short from disrespecting on this parabolic gap right here. You could have taken a short position there, stop on the high, TP on the lows. You could have targeted 1 to 2, 1 to 3. It doesn't matter, but uh, hopefully you guys get what an SMT is. It's really simple. You don't need to complicate anything. SMT is just the um, confluence of direction. But you cannot short every SMT and you cannot long every SMT because first of all, what you need to know that does like have like a check marks. Like first of all, does price have a reason to go that way. That's the first reason. Are we in a higher time frame PD array? Are we in a higher time frame PD array? That's that's what moves the market. These reasons what's moved the market. Market moves either to fill out imbalances or take out liquidity. So we cannot just say on a 1 minute chart and see long every bullish SMT and short every bearish SMT, right? We cannot do that. What we need to do is identify a higher time frame narrative and bias the direction the price is going to go, and then after that, that's when you look for an SMT, which is a really good confluence, as I said, which is a really good confluence of price going your way. So what I want to teach you guys as well, and many YouTubers don't talk about it, is inverse SMT. Uh, Well, inverse SMT is, so as you know, NQ and ES are correlated pairs, but there's also an inversely correlated pairs as well, which is Euro USD. Euro USD is correlated with GBP USD, right? GBP USD. But we have an inverse correlated pair, which is the XY, which is a dollar. This is what inversely correlated uh, pairs called like DXY and Euro USD and DXY and GBP USD are inversely correlated pairs. So as you guys know, and you should know that already, that if, let me remove everything, if DXY is bullish, Euro USD is bearish. Euro USD is bearish. So if we have an SMT, so if let's say like this, if DXY makes lower lows, Euro USD should make higher highs. So if we have an SMT there, if DXY makes higher high and Euro USD makes higher low, lower high, my bad, that is an SMT. So let's go over the examples here. So I am on the DXY chart right now. I want you to guys focus on this 6 a.m., 6 5 a.m. candles right here. 6 5 a.m. candles, as you can see. DXY didn't take these lows out, at all. But if we go on a Euro USD chart, let's focus on 5 6 a.m. candle, like this swing high. Euro USD actually took all those highs right here. So DXY failed to make lower low, and Euro USD made a higher high here. Took those highs. This is an inversely correlated pair SMT. We have an SMT here with DXY. DXY, which, as I said, is an indication of price. This is a bullish SMT, which is an indication of price is most likely going to go up from here if we have an SMT and clear direction if price has a reason to go up. So if we look at this, if we know that we have an SMT on these lows and price displaces up, here is our parabolic gap that we can take an entry from. Take an entry from there, stop on the lows, TP on the highs, even higher on this highs, and there is relative equal highs up here. Let's look for one more example, which is bearish, for you to fully understand this. So here, as you can see, let's focus on the 9 a.m. candle here. This, by the way, I want you to guys know that this SMT works on any time frame. Like, just because I'm on an hourly time frame, I'm on 4 hour time frame, I was on a 1 minute time frame as well, right? Price is fractal. You need to understand that the price is fractal. Any time frame, every time frame is the same. The pattern that you see, the SMT that you see on the hourly time frame, you're gonna see on any time frame, daily, monthly, weekly, 15 second, 1 minute, 2 minute, doesn't matter. Price is fractal. So I want you to guys focus on this size right here. This is a 9 a.m. candle, 9 a.m. candle, and this is a 10 p.m. candle right here. As you can see, DXY went up, took the high out, and then started going lower. If we go on a Euro USD chart, uh, I lost the track. It's 22 April, 22nd April. Here, yeah. If you look at the 9 a.m. candle, actually it failed to take the, this low out. So we have an SMT with DXY. We have an SMT with DXY. We have bearish bearish price action here on the XY, and we have a bullish price action on Euro USD. So if we know we have an SMT here and we have a reason to go up, maybe this relative equal highs down here, up here, there's so many highs resting above here, or general consolidation of the price, we can take an entry from, we can look for a bullish entry from here. Our bias should be bullish right here. So if we are waiting for an order block to form, here's an order block entry, retraced, manipulated all those lows, retraced. You can take an entry from here and take it out, take it to this high. And after this, after displacement, if you're waiting for a displacement, here is your fair value gap entry right here. Here is your CISD, which is an order block. Make it other color. Let's make order blocks this. So we have a CISD, we have an order block here. You can take an entry from there and uh, make money. Hopefully you guys enjoyed the video and learned something new. SMT is really simple tool to use in your trading. Hopefully you guys get the idea of it, and I'm sure you will find it helpful because it's really a good tool to use. What I want you to guys now to do to confirm that this thing works and it's just not hindsight, that I'm not talking hindsight here. I want you to guys go onto your charts and back test it, front test it, back test it, and you're gonna see the results. Thank you guys for listening again. As always, goodbye and have a great trading.